Hi guys, good afternoon. Welcome to end of day debrief. On what was, well, early on, a very quiet day. It's got a little bit active as the afternoons progressed, as the US sessions come in, and we've started to see a few little bits of adventure to the upside in some markets. Still the S&P struggling, although not turning back, so we'll come on to that crucially in a little bit. And also oil, an area that I talked about this morning, still holding that, and we'll look at that very briefly in top trades. So what's been going on? This is oil, and the area that we were looking at this morning was this 80 zone. We dipped down to 65, 80's held once again today, and then come that pit session open, we've kicked on towards the upside. Bear in mind though, this is the last day, well, it's not the last day of trading in this contract, but most of the volume's going to shift on, well, tomorrow likely. Thursday's the final day of trading, so you'd expect no volume at all by Thursday. So this realistically is the last day of trade for the September contract. But from the pit open, we have held that 41.80 zone and progressed towards the upside. Big question now, having done that, if we can hold above 50, 42.50 that is, this now opens up the chance for continuation higher, break these recent highs at 42.94. So this is where you want to be getting onto your next contract and start working out where those equivalent levels are, where this equivalent consolidation followed by rollover came from. That's on an hourly basis, by the way. So around about 3 or 4 hours to create that consolidation and rollover. So study that area there. If we are going to start breaking higher, what areas have we got in here to be very aware of? But crucially, we have held those 41.80s. We are now starting to push up around about the 42.40. 42.50 area. This now is the point where we want to see value shifting higher, get up into this zone here, and that can then form a bit of a base to then start going for a next leg higher, continuation, and attempt to break these recent highs and finally get ourselves back up to that sort of $45 level, which were the lows that we had prior to the coronavirus absolute collapse that we saw in oil. Right, very quick look at top trades here, and what we're going to look at is this oil absorption. We've seen it down at 80s already. We saw this last week. And what we then got today is, rather than it be an absorption down there, you actually got a large order sitting down there. So you see it there, 200 sitting down at the low. And what we then get is trade down to it, and we trade, break it, absolutely no energy. And so if you're looking for a breakout, and we talked about this on a mental session last week, of gold when it broke out, maintaining that selling pressure and it increasing. We don't see that here. Instead, what we get here is a complete no energy drop. So coming up to it, we know that this has been an area already. So there's 80 to 85 zone. And then on Friday, we did try it down to 65 and we saw absorption down there. But what this is all about is seeing that there's a lack of follow through. And then even when we hold below that level later on, until you can get a continuation of that move, this is always susceptible to then a reversal. And what you can see here, you look at the way it's trading, there's so little actually happening on the ladder. This is always a sort of danger sign. If we're going to see a break, if you're going to see movement in this, you want to see it break through 85. You want to see the volume come in, pace coming in already, and you're just not seeing it. Yes, it takes out 88 and trades 87. Straight away a bid comes back, and the sort of exchange of trade here. So what trades through is very low. It's not quick to keep on hitting. You see a few lots trade, offers come back, not a great deal more happens. This is not looking likely to actually continue to break this area. Still, nonetheless, as a trade idea, you're still looking at this thinking, well, you know that this is quite a key area, 85 to 80. If we trade through that and you start finding more selling, this potentially could be the beginning of a move. So it's sort of a later entry to the trade. Straight through, trade to 200, immediately straight back on the bid. That's not what you want to see. And then having come back on the bid with a little bit more energy, as in the selling, you sold 60 reasonably quickly after hitting through that 200, no continuation. And so this is giving you quite a clear sign that once more, down at these areas, one, you're finding buyers quite happy to suck it up down there, but two, you're also finding that sellers do not have the willingness to keep on selling when you get down there. This is a bit of information that helps you out. Now, I'm not saying that you buy it from there and that's that, but having had another attempt lower, once you get up above this 85 once more, so this is the bit we just looked at, once back above 85, the move to the upside is on. We've once more been shown that we can't go down, and so it's not just all about the execution of trade, it's the information you get from the lack of follow through in this one that helps you have conviction towards the upside in oil today.